The sharing economy created these really interesting industries. For example, Uber, you can just hail a ride and go from point A to point B. And if you want to rent somebody's house and go on a vacation, you go to Airbnb. Airbnb is a high growth company that allows people to rent somebody else's private residence or a nice, interesting place in a distant city or a foreign country. It's a really neat experience. I've been renting on Airbnb for 15 years. I was an Airbnb owner. I had two properties on Airbnb that I invested in and ran those properties on Airbnb for 10 plus years. This is a really interesting sharing economy industry. And I'd like to tell you about Airbnb and why I became a stockholder in Airbnb, give you the reasons why I invested, and give you some updated analysis that I have on this company. My name is Victor. I'm an active value investor. I have an MBA and I have a lot of business experience. I use that experience to evaluate companies like Airbnb, and I shared that evaluation on YouTube. So you can take a look at it, see if you can learn something from it as well. Let me get into Airbnb. I take all my investments through a consistent process. That process involves 4 questions followed by a decision whether I should buy more shares, hold, or sell my shares. First question, do I want to be part owner in this company? Do I understand the business? Do I want to own this business? Is the industry something, an attractive industry? Is it an industry that I understand? Do I want to be a part of that industry? Second question, do I believe the management team is doing a good job managing that company? Is it being operated well? Is the balance sheet in good shape? And one asset test is the debt cannot be more than 3 times EBITDA. And last, I want a discount on the stock. I invest to make money, and I need a discount so that I can see my investment go up in value over time. Based on the answers to those questions, I either buy, hold, or sell this particular stock. The story in Airbnb is fairly interesting. It was, a company that created a sharing economy for privately owned residences, and that you can rent somebody's house. It might be somebody's house at a ski resort, somebody's beach house, somebody's home in a nice, outdoor setting, or in a city. They grew like a weed, as I'll show later. And their business model is quite simple. It's a sharing economy like Uber, and you can rent somebody's house. You can use their website. Both the owner of the property and the person that's going to rent it, basically make a match online. You pay all your fees to Airbnb. Airbnb gets a percentage of the rent, and voila, you have rented a place on Airbnb. What makes their business really attractive is Airbnb doesn't have to own one property. They don't have to invest in one real estate, asset, but they get to use all the assets of all these that all these people own, and they rent them on their website. So it's very lucrative, and they can grow very fast. You think about the addressable market, it's basically all the homes around the world where somebody wants to rent an extra room, maybe a unit on its own, an entire house. It is really, and just about anything goes. So the business model, I totally understand. I really like the story of Airbnb. I love their growth, and that's why I invested in Airbnb. Let's take a look at their financials, starting with their income statement. Let's start off with the history of their revenue. Looking at the last 5 years, they have grown a staggering 130% over 4 years. So that's just awesome growth. They went from $3.6 billion in 2018 up to $8.4 billion of revenue in 2022. This is a really young company. It's been around for roughly 13, 14 years. It's been public about 2 years. So this is just really great numbers from a young company. Looking at their income statement for the last closed quarter in 2022 for Q1, they were at $1.5 billion in revenue, but they've gone up to $1.8 billion. That's a 20% increase quarter over quarter, year over year. So that's great growth by the company, and they're profitable. Again, really young company, 2 years from its IPO, and they struck profit. Their earnings per share, it's expected they're going to have an earnings per share of $3.46 per share. 26 analysts cover it. This is a somewhat of a darling stock out there. That's why their valuation is nearing $100 billion, and they just IPO'd 2 years ago. And next year, they expect that earnings per share will be around $4. I think that's all doable. And looking at their price to earnings, it's at 47.6. I think it could be higher. I mean, this is a company that's somewhat of a sure thing. It's a growth company. It's in the right space. It does things really well. It's the market leader. So I'm going to use a 60 PE on my valuation based on earnings per share. Let's look at their balance sheet. First, cash is made up of, cash and short-term investments. It's a really staggering amount compared to their debt, which is only $1.9 billion. If you compare the two, you have about $9.6 billion of cash and short-term investments versus $2 billion of debt. So basically, they could pay off their debt and still have lots of cash left over. Really strong balance sheet. Looking at the statement of cash flows, it looks great. Let's start off with this year's cash flows from operations, $1.587 billion. They only needed to invest $6 million of CapEx into the business. That's just a great increase of 32% increase in free cash flow. Just a great performance by Airbnb in the first quarter of 2023. All right, let me value Airbnb. I'm going to use two methods. First, the free cash flow method, valuing what I believe all the cash flows that we expect from this company into the future are worth today, as well as the earnings per share valuation. Based on their earnings per share, what is the company worth? First, let's value based on free cash flows. Their trailing 12 months put them at $3.79 billion of free cash flow. I'm going to use that as a starting point, and I'm going to grow those at 10%. As I showed you earlier, they were growing at 32%, but let me put in a little bit of a conservative number there, and we're going to grow those numbers by 10% from years 2, 3, 4. In the long term, I'm going to grow by 5%. I'm going to discount those free cash flows by 8.5%. I think that's a reasonable weighted average cost of capital based on the fact that they really don't have any debt. They produce a lot of free cash flow. Based on the terminal value, as well as the cash flows from year 1 to 4, the intrinsic value of those cash flows is $115 billion. I'm going to add the $9.6 billion of cash they have on the balance sheet and take away the close to $2 billion of debt that they have on the balance sheet. It gives us an equity value that this company is worth $122 billion. Their market cap is $91.6 billion, so it offers up a nice discount. We take the number of shares, 630 million shares, divide the value by that number of shares, and we get an intrinsic value of per share of $194 per share. Stock price is 145. So it offers up a 34% discount using the free cash flow method. And I used a conservative growth rate in that valuation. Now let's look at earnings per share. Earnings per share expected are $3.46, totally doable by this company. I'm going to a 60 PE. This is the alpha company in the space, growing, operating exceptionally well. So I feel good about 60. I take those numbers, I get a valuation of earnings per share of $178.92. Current stock price is 145, so it offers up a discount of 23%. I blend these two numbers, giving more weight to free cash flows. I include 2/3 of this, 1/3 of earnings per share, and I get to a blended value of that provides a discount of 30%. It's been a fun year to be a stock investor. 2023 has had a lot of my stocks go up, and Airbnb, it's been a lot of fun to watch it go up. It's up 71% on year to date. And I bought into this company in 2022. It had a very good buy point, and I bought into this position. This is the 4th largest position in my portfolio. Performance from Airbnb is excellent, up 71%, growing and very profitable. For a young company to produce this kind of free cash flow is just special. Great job, Airbnb. The balance sheet doesn't have any debt. Great balance sheet. I expect high growth in revenue for the remainder of 2023. Profits to continue and the free cash flow to continue. The stock price is high, So there can be pullbacks, which offer an opportunity of a better entry price. So I'm looking for those pullbacks to buy my shares in Airbnb. This is the dominant company in short-term rental. I could say that because I own 2 short-term rentals here in Southern California, operated them, made them very successful. And I can tell you that Airbnb has 80 to 90% market share of the reservations, at least in California. And I've traveled to Europe. I was in Italy a couple of weeks ago, had a great 2-week trip. Used Airbnb exclusively, had a great experience. They compete with bookings.com in Europe, but they are growing quite a bit in Europe, which leads me to the next category, which is international growth. I've used Airbnb in Mexico City. I've used it in Europe several times that I've used in Europe. And I can tell you that it's very comfortable. Their brand is very recognized around the world. So it gives them international growth, both for Americans traveling abroad, as well as people from other countries using Airbnb. So the addressable market around the world is quite massive, and they have a lot of room to grow globally. This could be my 4 to 6 bagger. At this point, I'm up considerably on Airbnb, but I think if I manage this investment right, I could be sitting here 5-10 years later with a 4 to 6 bagger on my hands. Let's scorecard Airbnb. First, do I want to be a part owner in this company? Do I want to be in this industry? Absolutely. The sharing economy, if you can look at Uber, you can look at other sharing companies. It's proven to be a solid business model, and Airbnb is very profitable, growing very quickly. The company is very well operated. The team here probably has the best ideas, just beautiful website, just the best technology and the best kind of experience for that customer that you can think of. The balance sheet, no debt, so very good shape. Get a discount on the stock. So I am a buyer of Airbnb. Hey, thank you for watching my video. I hope you found it interesting. Please keep in mind, I'm not making any stock recommendations. I'm not recommending you buy Airbnb or sell it. I'm just sharing my experience, and this is just for entertainment and educational purposes only. Thanks again for watching. Good luck investing in 2023.